Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within financial reports from the market's biggest players. Today we're diving into the latest annual shareholder report from Popular Income Plus Fund Inc. Get ready because this report actually gives us a pretty interesting look at how they navigated markets over the past year ending June 30, 2025. And it's not just about the numbers, it's also about what those numbers mean for their investors and their strategy. Before we start diving deep, if you appreciate getting straight insights from these dense corporate documents, make sure you subscribe and ring that notification bell. We break down these SEC filings so you don't have to. Also, if you're looking for a community of like-minded investors and want to discuss these reports, further join our Discord server. The link is in the description below. Alright, let's get right into it. This report covers the period from July 1, 2024 to June 30, 2025. We're looking at Popular Income Plus Fund Inc., which offers different share classes, Class A and Class C. The Class A shares, for instance, saw a total return of 1.97%. Now that might sound modest, but the report breaks down why. They attribute this positive performance mainly to the returns from their bond holdings and overall price increases in US bonds. Specifically, the 10-year US Treasury yield actually went down slightly during this period, which usually helps bond prices. However, it wasn't all smooth sailing. The fund's performance was held back a bit by a drop in the prices of Puerto Rican municipal bonds within their portfolio. Plus, like any investment fund, operating costs chipped away at the returns too. Because of these factors, the report admits they trailed their main benchmark index for the period. The net asset value, or NAV per share for Class A shares, nudged up from $3.31 to $3.32, which is a tiny increase, but dividends of about 5.5 cents per share were also paid out. Now, let's look at the long-term picture. They show a table called Total Return. Based on $1,000 investment, if you look at Class A shares without any sales charge, a hypothetical $10,000 investment made back on May 21, 2020, $41.19, $45 as of June 2025. That's actually a decline compared to the initial investment. The same investment with a sales charge would be worth about $910 to $45 as of June. $1,000 investment in the less expensive Bloomberg US Aggregate Bond Index would have grown to over $925. As of June 2025, that's actually a decline compared to the initial investment. The same investment with a sales charge would be worth about $902 in a less expensive Bloomberg US Aggregate Bond Index, would have grown to over $19. In contrast, that same $1,000 investment made back on May to $55 as of June 2025. That's actually a decline compared to the initial investment. The same investment with a sales charge would be worth about $919. This next table really spells it out clearly. For Class A shares without sales charges, the average annual return since inception back in May 2021 is a negative 1.55% annually. Compare that to the Bloomberg US Aggregate Bond Index, which averaged a negative 0.55% annually since inception. So essentially, for this fund, the market performance hasn't quite overcome the fund's own course and strategy over its life so far. Looking at the fund's overall stats as of June 30, 2025, total net assets stand at about $19.6 million. They hold 45 different investments and their portfolio turnover rate is a very low 4%. This low turnover suggests they aren't actively buying and selling a lot, which can be good for reducing trading costs, but it also means their strategy is likely more of a buy and hold approach. Let's peek at what's actually in the portfolio. The top 10 holdings are heavily skewed towards various Puerto Rico GNMA or Ginnie Mae bonds, making up a significant chunk of the fund. For example, Ginnie Mae iPool 915 2039 is the largest holding, representing 16.72% of net assets. This concentration in Puerto Rico related assets is a key characteristic of this fund. In terms of when these investments are set to mature, a massive 84.2% of their investments are due in over 10 years. This indicates a very long-term investment horizon and potentially higher sensitivity to interest rate changes over time. And as we saw in the holding section, the asset class breakdown confirms this heavy focus on Puerto Rico specific bonds. Puerto Rico GNMA bonds alone account for over 41% of their total investments. Puerto Rico Fannie Mae bonds are another big piece at over 30%. This heavy concentration is a significant risk factor worth noting. Now, let's quickly touch on the Class C shares. These have slightly different cost structures. The cost of a hypothetical $1,000 investment for Class C shares was $657 or 6.57% annualized. For the last 12 months, Class C shares posted a return of 1.21%. Similar to Class A, the performance was also impacted by the Puerto Rico municipal bonds and fund expenses. For Class C shares without sales charges, the average annual return since inception is a negative 2.64%. With sales charges, it's also a negative 2.64% annually. Again, this lags the Bloomberg US Aggregate Bond Index. Let's circle back to costs. For a $10,000 investment Class A, shares incurred costs of $581 or 5.81%. This is quite high for a bond fund, and it directly impacts investor returns as we saw in the long-term performance. Moving into the financial statements themselves, let's look at the schedule of investments. You can see here a detailed breakdown of where the money is invested. The document lists quite a few Puerto Rico government general obligations with values in the hundreds of thousands and millions. For instance, there are several Commonwealth of Puerto Rico General Obligation Unlimited Bond Series 2022, A1 with rates varying and maturities spread out. This is where the bulk of the fund's investments are seemingly concentrated. The statement of assets and liabilities shows that as of June 30, 2025, total assets were around $28.3 million. They used about $8.5 million in reverse repurchase agreements, which is a form of borrowing to finance investments. The net assets of the fund were around $19.6 million. On the statement of operations for the year ended June 30, 2025, the fund earned about $1.6 million in interest income. However, expenses were also significant, totaling over $1.3 million. The net investment income was about $2, accounting for gains and losses on investment $6,000. Now these financial highlights tables are critical. For Class A shares, the net asset value per share ended at $3.32. The total return for the year was 1.97%. However, looking at the longer term, the total return since inception is a negative 1.89% annually, as we saw earlier. The ratio of gross expenses to average net assets for Class A shares was a hefty 5.81%. This is a very high expense ratio for any fund that significantly impacts returns for the investor. For Class C shares, the gross expense ratio was even higher at 6.57 on investors in this fund, and or looking at the longer term, the total return since inception is a negative 1.89% annually. As we saw earlier, the ratio of gross expenses to average net assets for Class A shares was a hefty 5.81%. This is a very high expense ratio for any fund and significantly impacts returns for the investor. For Class C shares, the gross expense ratio was even higher at 6.57%. Investors are losing money over the long-term TV. When we look at the overall story here, it's really about concentration and cost. The fund is heavily invested in Puerto Rico-related assets. While this might provide some tax advantages within Puerto Rico, it also exposes investors to significant risks tied to the region's economic and financial health. We saw that the long-term performance for both Class A and Class C shares has been negative since their inception in 2021. This means that for investors who got in back then, they've actually lost money on average each year after accounting for expenses. The high expense ratios are a big part of this. A nearly 6% or 6.5% expense ratio means that a significant portion of any potential gains or even capital is eaten up by fees. The concentration in Puerto Rico is a huge risk. The concentration risk is also a major point. If Puerto Rico's financial stability were to worsen significantly, it could have a disproportionate impact on this fund's performance compared to a more diversified fund. On the flip side, if the Puerto Rico market were to rebound strongly, the fund could see significant gains, but that's a big if. Conclusion, queso. So my take is that Popular Income Plus Fund is a niche product with a very concentrated strategy and high costs. While it might appeal to specific investors familiar with and comfortable with the risks associated with Puerto Rico assets, the long-term historical performance combined with a high expense ratio suggests potential investors should proceed with extreme caution. The fund strategy, the heavy investment in Puerto Rico and the associated fees are clearly presenting a challenge for generating positive returns for investors over the long haul. While the past year showed a small positive average investor seeking steady growth, it might be one to watch from a distance. Alright, that's our deep dive into the Popular Income Plus Fund's latest annual report. What's your take on these numbers and what they signal for the company's future? Are you invested in similar niche funds? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps the channel, and of course subscribe for more in-depth looks at corporate filings. Don't forget to check out our Discord community in the description for more investor discussions. Thanks for watching, and we'll see you in the next video. We're going to be going through half the channel, and of course subscribe for more in-depth looks at corporate filings. Don't forget to check out our Discord community in the description for more investor discussions. Thanks for watching, and we'll see you in the next video.